Hello, welcome back to Steps to Wealth channel. In this video, we'll delve into the world of stock market investment. 1. Introduction. The importance of investment strategies in the stock market. Investing in the stock market can be a thrilling and potentially lucrative endeavor. However, it is not without its risks. Investment strategies serve as a roadmap for investors, providing a clear direction and guiding principles for decision-making. They help investors make informed choices, manage risks, and maximize returns. In essence, a solid investment strategy is the foundation for achieving stock market success. One of the key benefits of having an investment strategy is that it allows investors to stay focused and disciplined in their approach. The stock market is known for its volatility, with prices fluctuating on a daily basis. Another crucial aspect of investment strategies is risk management. The stock market inherently carries risks, and it is essential to have a strategy that includes risk mitigation measures. Lastly, investment strategies provide a framework for evaluating opportunities and making informed investment decisions. They help investors identify undervalued stocks, determine entry and exit points, and assess the overall market conditions. In conclusion, investment strategies play a pivotal role in stock market success. They provide a sense of direction, discipline, and risk management, while also enabling investors to make informed decisions. 2. Understanding the basics of the stock market. It functions as a platform where investors can trade these shares, representing ownership in a particular company. Understanding the stock market involves familiarizing yourself with key concepts such as stocks, exchanges, and indices. Stocks, also known as equities, are units of ownership in a company. Stocks can be categorized into different types, including common stocks, preferred stocks, and penny stocks, each with its own set of characteristics and risks. Exchanges, such as the New York Stock Exchange, NYSE, or the Nasdaq, are where these stocks are traded. These exchanges serve as centralized marketplaces where buyers and sellers come together to execute their trades. Indices, such as the S&P 500 or the Dow Jones Industrial Average, are benchmarks that track the performance of a group of stocks. They provide a snapshot of the overall market and can be used as indicators of the market's direction. So, take the time to educate yourself on these essentials and set yourself up for stock market success. 3. The different types of investment strategies. When it comes to investing in the stock market, there is no one-size-fits-all approach. Different investors have different goals, risk tolerances, and time horizons. Therefore, understanding the various types of investment strategies is crucial in unlocking stock market success. Growth investing. This strategy focuses on investing in companies that have the potential for significant growth in the future. Growth investors typically look for companies with high earnings growth rates, strong competitive advantages, and innovative products or services. They believe that by investing in these high-growth companies, they can generate substantial returns over the long term. Value investing. Value investors seek out stocks that they believe are undervalued by the market. They look for companies whose stock prices do not reflect the true value of the underlying business. By investing in undervalued companies, value investors aim to generate returns when the market corrects and prices eventually rise. Dividend investing. Dividend investing involves investing in companies that regularly distribute a portion of their profits to shareholders in the form of dividends. Dividend investors prioritize stable and consistent income over capital appreciation. Instead of trying to beat the market, index investors aim to match its performance. Momentum investing. Momentum investors focus on stocks that have shown strong recent price performance. They believe that stocks that have been performing well in the past will continue to do so in the near future. This strategy relies on the idea that trends tend to persist and that buying stocks with positive momentum can lead to profitable trades. Contrarian investing. Contrarian investors take the opposite approach of the crowd. They actively seek out stocks that are out of favor or have experienced a significant decline in price. Contrarians believe that the market tends to overreact to news or events, creating buying opportunities for savvy investors. By going against the prevailing sentiment, contrarian investors aim to profit from the market's eventual correction. 4. Long-term versus short-term investment strategies, pros and cons. When it comes to investing in the stock market, One of the most crucial decisions you'll have to make is whether to adopt a long-term or short-term investment strategy. Each approach has its own set of pros and cons, and understanding them is essential for unlocking stock market success. A long-term investment strategy involves holding onto your investments for an extended period, typically over several years. The primary advantage of this approach is the potential for significant returns over time. By staying invested in quality companies and allowing them to grow, you can benefit from compounding returns and ride out market volatility. Long-term investments are also favored for their potential tax advantages, as capital gains taxes are typically lower for investments held for longer periods. However, long-term investing requires patience and a long-term outlook. The main advantage of this approach is the potential for quick profits. By taking advantage of short-term price movements or market inefficiencies, traders can capitalize on opportunities for gains. Short-term trading can also provide more flexibility, allowing you to react swiftly to market news or changing trends. However, short-term trading comes with its own set of challenges. It requires a keen understanding of market dynamics, technical analysis, and the ability to make quick decisions. Transaction costs, such as commissions and fees, can also eat into profits, making it essential to carefully consider the costs involved. Whichever strategy you choose, it's important to stay informed, continuously educate yourself, and adapt your approach as market conditions change. 5. Value investing, a deep dive into the strategy. Value investing is a tried and true investment strategy that has been utilized by successful investors for decades. The philosophy behind value investing is rooted in the belief that the market often undervalues certain companies due to short-term factors or market fluctuations. By conducting meticulous research and analysis, value investors aim to uncover hidden gems that have the potential for significant future growth. One of the key principles of value investing is conducting a thorough evaluation of a company's fundamentals. This involves analyzing financial statements, assessing the company's competitive position within its industry, and evaluating management's track record. Another aspect of value investing is the concept of a margin of safety. This means purchasing stocks at a significant discount to their intrinsic value, providing a cushion against potential downside risk. By buying stocks at a discount, investors not only increase their potential for capital appreciation but also minimize the risk of loss. Value investing requires patience and a long-term perspective. While value investing can be a profitable strategy, it is important to note that it is not without risks. Market conditions, industry shifts, and company-specific developments can impact the performance of value stocks. We hope you found our ultimate guide to investment strategies helpful in unlocking your stock market success. Investing in the stock market can be a daunting task, but with the right strategies, you can navigate the market with confidence. Remember, successful investing takes time, patience, and continuous learning. So, go ahead and apply these strategies to your investment journey and watch your portfolio grow. Happy investing!